Good morning. My name is Manju Ganariwala, and I'm the co-chair of the Standard Setting Process Oversight Committee meeting, along with Lara Abrash. Just public session reminder here to all those participating in the public session. This is a friendly reminder that the public session will be live streamed, and that as with any public meeting, we might have listeners from the media. Our goal will always be to have a transparent and productive discussion, and we simply ask that those in the room be mindful of these factors when asking questions or sharing commentary. Thank you.
Thank you, Manju,
Lara,
and
go ahead,
welcome.
take it away.
Thank you and welcome. I'm going to open up the meeting. We're going to now first have Joel join us from GASB to provide a GASB update. So Joel, I'll hand it over to you.
Thanks, Lara and Manju, and thanks to the committee for being here. As always, we really appreciate your oversight of the GASB and look forward to any comments you might have or questions about our activities for the second quarter. I'm starting on master page 61 with our highlights. We will walk through, we had a couple of comment periods closed from exposure drafts that we had issued in the first quarter. Comments periods closed on our implementation guide exposure draft, as well as our exposure draft of a proposed statement on infrastructure assets. We'll talk about some of the feedback we received from the exposure period a little bit later in the presentation. The next two bullets talk about changes to our pre-agenda research. I'll highlight a little bit more of that on our roll forward, and Alan later will talk about some of the changes we've made in that research part of our agenda. Did want to highlight the only place here is second quarter tends to be our busiest quarter. We spend a lot of time. We do over 100 stakeholder presentations at conferences in almost every state of the country. And the second quarter and the third quarter a bit, but second quarter in particular tends to be one of the busiest quarters. And we did have 36 presentations that we did at stakeholder conferences, reaching over 12,000 stakeholders during the second quarter alone. Also, not quite second quarter, but I guess beginning of the third quarter, July 1st, we did welcome Lisa Washburn onto the board, and she can tell you she's hit the ground running and participated in a couple of public forums and a board meeting, and she's been a really great addition to the board already. So we'll love having Lisa on, excited to have her on. Moving to the roll forward on master page 63, no changes in the standard setting projects part. Those 4 projects, we'll highlight those and their current status and what's going on with them in the coming slides. The research part of our agenda, you can see we did add 3 projects there and remove 1. Alan's going to talk more about that, but I'll at least highlight a little bit here that in our May meeting, we talked about how at the very end of March, our advisory council, the GASAC, did their annual prioritization of the things they believe the board should be working on. And I'll highlight for you the 7 highest prioritized items on that list and what we're doing. 2 of the 7 top rated items were kind of already on the technical plan and remain on the technical plan, that being our gap structure research, which we continue to progress on and we'll hit on a little bit later. And then our monitoring activity for just understanding how technology is changing the way government financial reporting works. That continues to be something we monitor and paying attention to for any impacts it should have in standard setting or from the GASB's perspective. So those were 2 of the 7. 3 of the 7 highlighted actually moved on to the pre-agenda research phase of their life cycles, that being digital assets, the financial reporting entity, as well as deferred inflows and outflows, in particular for pension and OPEB, in particular their impact on expense. Alan's going to talk more about those 3 pre-agenda research items being added and their objectives later in the presentation, but that's us responding to the things that our stakeholders are telling us to work on. That leaves 2 items: governmental fund financial reporting and fund balance. You know, the governmental fund financial reporting, we've talked about that for a little while now. That's something that we really tried to address in the reporting model project. We had to take governmental funds out because we just didn't end up achieving our objective there. And we just need a little bit more time to pass, I believe, for us to really start fresh with new team, kind of some new board members and start that project fresh, as opposed to just stopping where we left off, which was not the best place, as the board determined, in taking it off. And the other one was kind of a new one to this top layer, which is fund balance. So we're looking at statement 54. So we're going to do some more work to explore that with the advisory council to understand kind of what the challenges are or issues are they would like for us to work on as it relates to fund balance before deciding how to proceed there. But we're, again, trying to focus on the things that our stakeholders tell us that we should be working on in standard setting. All right, moving into the standard setting projects, little update, slide 64, our one big project, revenue and expense recognition. It continues to progress and move forward. We are getting closer to an exposure draft. As we talked about before, this one is big enough that a majority of the board believes we should actually break it into two halves. The exposure draft of a proposed standard, with the first part coming in mid-2027, the second part coming in early to mid-2028. The first part would relate to how to categorize transactions between the categories that you currently might think of as exchange or non-exchange, but we're changing some, as well as the first half would identify all the recognition and measurement principles related to non-exchange transactions, or what would now be category B. The second half of the exposure draft in 2028 would be the performance obligation model coming into our transactions that are currently thought of as exchange, or we now call category A transactions. With that, we're going to have over 100 illustrations between the two parts of the exposure draft. We're really doing a lot of things in this project to try to keep it simple when simple suffices, but have a robust set of guidance when more complicated transactions are undertaken by governments and they need more robust guidance to help them with the project. So again, we're moving along. It's a big project. It's taking us a while, but we're getting there and making progress. And I think doing it the right way to really help stakeholders with it when it comes out. Moving on to master page 65, our two major projects, the infrastructure asset project and the going concern or severe financial stress project. The infrastructure asset project did just conclude its comment period at the very end of the second quarter. We got a 93-day comment period. We received 81 comment letters. I'm going to go into a little bit more of that in the next couple of slides, but a lot of good feedback. And we held 3 public forums. One was actually in the second quarter. The other 2 have already happened. We're in early July. We had 23 participants, really balanced among preparers, auditors, and stakeholders, really robust roundtable, 3 to 4 hour discussions with a group that comprised of all those different viewpoints or perspectives with the board and our staff. Had a lot of good dialogue and comment. Those public forums, that roundtable format, continues to be very popular. This was the second time now we've done that. Continues to be very popular with the board, the staff, and all the participants, getting a lot of good feedback there. Again, I'm going to go over a little bit more there in the next 2 slides. Going concern, severe financial stress, we continue to redeliberate from our preliminary views. We are listening to the AICPA and the concerns they had about the interaction of this project and the going concern nature of it with the auditing literature. I think we have made some progress on things that they would view favorably, including the requirement to have an assessment of a forward-looking assessment that would evaluate whether governments would be able to pay their obligations as they come due within the next 12 months beyond the date the financial statements are available to be issued. So I think the AICPA was probably happy with that choice, but we continue to redeliberate what that looks like and go through all the kind of parts of this project, and do expect an exposure draft in mid-2027 on this project. And we continue to have a really good dialogue with the AICPA. All right, before we get into the research, and I turn to Alan, wanted to finish up with a little bit of detail for you on our infrastructure asset due process. I've actually broken this into 2 slides. The first one on master page 66 is only for the time period since the preliminary views came out and the related public hearings and user forum on it through the public forums in July on the exposure draft. So this is kind of only the exposure draft part of the due process, but you can kind of see the mix of a lot of good comment letters, a lot of preparers, but we had a lot of users, or 19 comment letters from users, 21 comment letters from auditors, a lot of good kind of diversity in views from both the comment letters and then the public forum participation. So I think, majority, if I wanted to really raise the feedback, the preparers, I think, really see the benefits of this project. That kind of comes through. They understand what we're trying to do. So I think us communicating the objectives of this project has come through. They remain concerned about costs, and we've done a lot to try to mitigate cost. And I think they recognize that some. They might want us to do a little bit more. We'll see how that goes in the feedback. The users continue to really comment on how they like the information and see how this information is really going to improve their decision-making. But they also would like us to have maybe gone further. And so we continue to try to balance those costs and benefits and create the best product available. And we got a lot of good feedback in this round of due process. I think when you contrast master page 66 in that slide with 67, which encompasses now project to date from initiation of research to now and the outreach we've done, you see more gray here. And I think that in particular with this project, which is a lot of trying to give users more information that they were asking for, we did a lot of research interviews and surveys really of users that happened in the research phase or the preliminary phase of this project that we continue to rely upon and that really drove the preliminary views document. And then those, those disclosures we were adding as part of the project, really coming from what users were telling us they wanted, have continued on into the exposure draft. And so users will comment and talk about maybe edits we've made, but we're continuing to kind of look at this project holistically and still relying on essentiality judgments we made from the research that was done initially on this project in our outreach and surveys, et cetera, and interviews with users. So that's really a lot of gray and a lot of balance in this overall due process interactions that we've had on this project since its inception. With that, before I turn it over to Alan to kind of talk about our implementation guide and take the rest of the presentation, happy to pause there to see if there are any questions on what I've covered so far.
Thank you, Joel. Committee members, any reactions or questions for Joel before we proceed? Okay, looks like you're good, Joel.
Thank you for that. And as Joel mentioned, we're going to talk about a practice issue project right now on the horizon. And it's really related to an implementation guide, which for us are just Q&As that we provide to stakeholders related to Statement 103. One of the things Statement 103 did is it defined what operating revenues and operating expenses are versus what non-operating revenues, non-operating expenses are. And even more importantly than that, it brought this notion of subsidies. And that's a new notion in our literature. And not surprisingly, people had questions related to that. So this implementation guide is trying to answer when is something and when is something not a subsidy. We put the AD out in April of 2026. It was out for 76 days, and we had 94 comment letters. Now, I will say that that's a lot of comment letters for an implementation guide. If you ask me how many on average we get for an implementation guide, I'd tell you probably 30. That would be kind of normal. I will dig into that a little bit more on the next slide, but 94 was a lot. We have began redeliberations. We actually are to the point now where we're going to bring a ballot draft of this implementation guide to the board. Actually, it's in our September meeting. I know it says late August, but it's actually in our September meeting. So we are at the point now where we're almost to the finish line. But if you looked on master page 69, what you'll see, similar to the infrastructure slide that Joel just showed you, is all of our interaction with our stakeholders related to this implementation guide. And one of the things I would take away from this is, yes, we did get a lot of feedback, and that feedback mattered. One of the biggest things that came out of this is we had one question in the implementation guide. It was related to Medicare, and we got a lot of feedback on it. And the gist of the feedback is the way the healthcare industry looks at Medicare and Medicaid broadly, and the way the staff was looking at it in the implementation guide is we were disconnected. We weren't on the same page. One of the things that happened because of that is I reached out to the folks at HFMA, Healthcare Finance Management Association officers. I reached out and said, let's talk. And we had a really, really good conversation. And what that led me to understand, and what we now understand, was the way they looked at it and the number of transactions they looked at it when they thought of Medicare, and the way we were looking at it from a staff perspective, we weren't in sync. Yet at the same time, determining how many transactions are in a binding arrangement isn't really a Statement 103 subsidy question. That's really a revenue recognition question. And so what that said to me was, this isn't really the time or place to be answering that implementation guide. And so this is an example where that implementation guide now, we've removed that question. I think that's an important reason to show that feedback does matter, because if we hadn't done that, we wouldn't have realized we were disconnected. So all this feedback and all this discussion resulted in that. And so that question now and HFMA was very happy with that answer, as was AICPA and a lot of other stakeholders. I would say that one question probably drove half of the due process documents we got. And if you pulled that out, we'd been back more in a normal frame of reference and a normal numbers we'd have gotten for implementation guides. So I do think that that meant the loop mattered. The next slide, if you go to master page 70, is really on our voluntary digital financial reporting taxonomy. We are going to issue a discussion memorandum for that in August of 2026, at the end of this month, quite honestly. That really is a discussion memorandum, is our ability, the staff's ability to go out to our stakeholders and say, here is what we're thinking. Here's some foundational components, some foundational concepts of how we're putting together the taxonomy. Clearly, a taxonomy is not standard setting. It's not going to drive standards. But at the same time, we want our stakeholders to understand this is what we're thinking. This is what we're doing. It's early on in the process. That's good. But it allows them to give us feedback and allows us to get feedback in addition to the technology consultative group that we also have, which also gives us feedback on a routine basis. We'll put that out for comment. I'm going to guess probably for 90 days or so, and let people just tell us, are we on the right track with that taxonomy or not? And then we'll see where that takes us from there. Joel mentioned some of the pre-agenda research. I've switched to master page 71. Joel mentioned some of the pre-agenda research and other research activities we took advantage of. Probably the first one to highlight is cyber risk disclosures. We got in the second quarter, took the board a paper that actually recommended not to go forward with cyber risk disclosure project. And I like to think of it as really a basis of a Goldilocks problem. What we really came down to is we could have asked, and we probably could have come up with ideas of what some cyber risk disclosures might have looked like. The problem with that is the first thing you realize is that the bad actors are also users of financial statements. And if you put too much information in those financial statements, guess what's going to happen? You just told them exactly what to do. The perfect example of that is, why don't we disclose how much cyber insurance you have? So if you have $5 million of cyber insurance, guess what your ransomware is going to be for? $4.9 million. You just gave them information they probably didn't need to know. The other side of that equation is, if you pull back from that and give them less disclosures, now you're giving them too little because it's just going to be boilerplate, and that's not necessarily a decision useful for the users. So we ended up at this place where we really didn't have just enough, just right, and so we moved on and the board decided not to have a project. The other two topics on here is just revenue expense recognition note disclosures. We've just tabled that project for a while until we get further along on RER. And the last one's on gap structure. And that's a research project really to ask the question, should we go to a single source of code like FASB has? We have different levels of authoritative guidance right now, our original pronouncements and our COD. FASB just has their COD. And the question becomes is that a better model? And what's the pros and what's the cons? And we're asking that. We have a discussion memorandum on the street right now that's been out there for 150 days. That was intentional. To just ask our stakeholders, what do they think? And what would they think about having a single source of guidance, i.e. a COD? If we flip to master page 72, I think big picture, what I would say on this slide is one big thing. We hear a lot about how we can, government, there's too much work, there's too much effort, the ACFR is too complicated, the ACFR is too complex. And we hear that even through the PIR process. I would say here's two examples of where we're trying to address that. The first one is asking the question of, Con 7 is a statement we issued about 3 years ago. The board did a concept statement. What requires something to be a note? Well, we're going back through all the pension and OPEB notes and asking ourselves a question, do all those pension OPEB disclosures meet this new definition of essentiality? So there's a lot of disclosures related to pension and OPEB. So we're asking ourselves, do they meet that bar and therefore should they stay? The second thing on here is something we've also heard coming out of the OPEB PR process. I would actually tell you that's not a known document yet and it doesn't exist yet, but this idea of volume of pension disclosures and volume of OPEB disclosures, as well as deferrals related to pension OPEB, are probably the top two things we hear when we talk to stakeholders about pensions and OPEB. And so we are somewhat trying to early address those two issues. The second one is the effects of deferrals. One of the biggest things we hear is we have deferrals. Do people understand them? Do they know how to use them? Where the biggest deferrals by far are related to pension and OPEB. And is there a way for us to look at that and maybe address the cost benefit of having them? And the staff is doing research on that right now to say, is the cost of producing those deferrals and keeping those deferrals worth the benefit it provides to the users? So it's us trying to be reflective and us trying to be responsive of what we see inside those OPEB and pension PI reports. Both of those are research projects are underway. Both of them have periods where we're trying to get through them at the end of the year, at the end of this calendar year. So hopefully have some decisions on those in the first part of next year. Last thing I'll touch on briefly is just the last page is on digital assets and the financial reporting entity. Not surprisingly, digital assets have crept into government. Sometimes some governments allow you to pay in Bitcoin, your property tax. There are some governments right now that have started to issue stable coins. There are governments now that through forfeiture and seizure processes actually have escheated property that is actually Bitcoin or cryptocurrencies. We are trying to understand what are the different types of digital assets, which ones governments are actually engaging in, and then how prevalent it is, and should we or should we not actually engage in any standard setting activity? Could be a standard setting project, it could be implementation guide questions, or it could just be that these transactions aren't prevalent enough yet, and therefore we don't need to do anything yet. So we're really trying to just get our hands on that and get a feel for that and get a gauge for that. The last one is one I think Joel mentioned a minute ago that has risen up to be in the top 5 for our GAS Act folks, and that's on the financial reporting entity. And I look at that and think about that really as just a project to try to think about, are there ways, or do we understand them, challenges in the application of the literature, and then challenges or issues with diversity and practice in the literature? And are there ways for us to address that? No doubt this is a very complex decision. It's a complex analysis. We get talked about all the time, but are there ways to simplify it and are there ways to make it less complex? And the research is seeing if we can identify those. Last thing in our whole section, and I'll stop and listen for questions and turn it over to FASB, is just our PIR. The last slide on master slide 75 is just the status of PIR. I will just leave you with, we are on schedule, we are on time, and we are making the right progress. With that, I'll leave it for questions.
Okay, great. All right, great. Thank you so much for the update. Any reactions or questions from our Oversight Committee members for the team? Well, I would take that as an incredibly thorough update. So thank you so much for that. Now we're going to move on to FASB. So with that, I'll pass it on to you, Rich Jones.
Great. Thanks, Lara. Welcome. Nice to see you, Manju, and the rest of the Oversight Committee this morning. And what I thought I'd do today is Jack and I will talk a little bit about an update on our agendas, our technical agenda, our research agenda, and other projects that we have in process. Also, an update on our agenda consultation process that's still ongoing. And then finally, talk a little bit about our post-implementation review related to the current expected credit loss standard. So if I can move you to slide 78, that provides an overview of our technical agenda. And you'll notice that the second quarter here at the FASB was fairly busy. We started the quarter with 13 projects on our technical agenda. We added 7 projects to our technical agenda during the quarter. And so a logical question may be, well, where did those come from? Well, some came from our agenda consultation process, so the 2025 agenda consultation process. Some were initiated by stakeholders sending us agenda requests. For example, we added a project related to contractual sale restrictions effect on equity securities for investment companies as a result of an agenda request. Some came from the EITF, where the EITF had looked at an emerging issue, referred it to the FASB, and the board decided to add it to our agenda. And others were added simply because the FASB was looking at an issue as part of our general process, and we identified that potential standard setting related to private credit disclosures was something to look into, and we've added that to our technical agenda. During the quarter, we did complete 2 projects, meaning we issued 2 final standards. We also issued 2 EDs, and Jack will give you a little more detail on both those 4 items, specifically the outreach we've done with stakeholders related to those items and their status. But so as of June 30th, there were 17 projects on our technical agenda. Up through the date of today's meeting, that has changed. There are now 20 projects on our technical agenda. But just to give you some idea of status with those, of those 20 that are on our agenda as of today's meeting, 2 of them, the board has voted to proceed to final standards, meaning we're in the drafting of the final standard phase. 9 of them, our board has voted to proceed to exposure draft, which means that we're in some phase of preparing and or reviewing exposure drafts for issuance to the public for public comment. 2 of them are in redeliberations, and then the remainder are in initial deliberations. So what you will see as the quarters progress throughout this year and into next year is many of those projects moving into further phases of those due process steps. So what that tells you is it will be an active end of the year for the FASB and beginning of next year for the FASB as we work through these projects. So with that, let me turn it over to Jack, and he's going to start on an overview of some of the due process steps during the quarter. Jack?
All right, thank you, Rich. So if we turn to master slide 79, the next 4 slides describe the efforts we employ to gather feedback, both through outreach and comment letters. Generally, we get broad feedback, as you will see, on the exposure drafts, and in preparing for the exposure drafts, we'll have more targeted feedback to inform the decisions that the board makes in the ED process. All right, so the first one here is on the initial measurement of paid-in-kind dividends on equity classified preferred stock, a big mouthful of words. It's actually a very narrow issue, whether you follow the debt or the equity model for accounting for the dividend. This came up through the EITF, and it's moved through the EITF process very quickly. And, we were able to get this issued. This is what I would call a straightforward issue, all part of maintaining the COD. All right. Master page 80 is environmental credits, which was recently issued. This was a comprehensive standard on a topic that for which there needed to be a gap. There was filling a gap in gap. And this talks about the accounting for the money spent on environmental credits and obligations, not about sustainability reporting. That's important to know. And when I say it's a comprehensive model, it addresses initial recognition, measurement, classification, disclosure, derecognition. As a consequence, there was a lot more feedback, and it was a wide variety of feedback, both in terms of comment letters and outreach. This will be effective in 2028 for public companies. All right, we'll move on to master page 81. This is an ED that is outstanding. Actually, comments were due back last week on market return cash balance plans. The source of this, again, was the EITF. And it was also discussed with the PCC. And this is adjustments to the pension model to consider market return effect versus solely an interest rate effect on certain cash balance plans. We had targeted outreach in advance of the ED and then got broader feedback, or we expect broader feedback when the comment letters come in. Master page 82 is about derivatives and hedging. This is a follow-on project to a maintenance project that was completed last year to continue to make hedging more reflective of the economics and to make it more workable. This particular issue relates to SOFR replacing LIBOR, so it has a regulatory origin. So before the ED went out, the staff worked with the regulators and received some feedback about their perspective, so that can be factored into the ED. Comments are due actually today, so we'll be evaluating those comment letters and working our way through. So we're pretty excited about that. All right. moving on to 83, I guess I'll ask any questions on what we have issued. Seeing
Thank
none,
you.
I'll run.
Let's just give us a moment here. Any
Okay.
questions thus far? Okay, keep going. Thank you.
All right. So my last slide is on the technical agenda and the activity over the last quarter, which Rich already kind of stole the thunder. It's been a lot. It's been a busy and also a very productive quarter in terms of documents that were issued. First of all, we talked about in a previous meeting about contractual sales restrictions, the request that we received from one of the stakeholders that suggested that the board needed to revisit how lockup periods are accounted for investment companies. That's been on a bit of a fast track. We've worked our way through the process largely this quarter and went to the board with a suggestion back in May. They added it to the agenda and gave us their thoughts. The staff put together an ED that was then issued, 15-day comment letter, and it was voted out on A5. And as Rich mentioned earlier, we hope to get this out this quarter. Now it raises the question, what did you do in terms of feedback? We actually got a lot of feedback in a short period of time. We received 24 comment letters. They were from a variety of stakeholders. We had a number of visits, calls, and also talks with the regulators. So we think we're well covered off. The next bucket is initial deliberations that were completed and exposure drafts expected this quarter. The first one relates to an emerging issue, and that is whether or not a stablecoin could ever meet the definition of a cash equivalent. The answer is yes, under certain criteria. But if you need to do that, but if you reach that conclusion and make the election to put the stablecoin in cash equivalents, the board thought that there should be some additional disclosure, that you should tell the world that there is a stablecoin in cash equivalents. As a consequence, then they thought about how to make that happen. And they came up with a model that was similar to, but not exactly the same as IFRS, which is to develop significant components, all right? Because it started out as a digital issue and it broadened a bit. The comment letter was extended, and we are in the process of trying to get the E-date out and look forward to many comment letters. Next topic that we expect to still get out this quarter relates to codification improvements, and that is our periodic update of small, narrow issues which really don't require a lot of debate but need to get the board sign off and approval, and it gets issued for exposure and we receive comments back. So that's just a maintenance item. And then in the final bucket, our initial deliberations completed and exposure drafts expected by the end of the fourth quarter. A big message here is all the different places that these come from. So accounting for commodities is whether or not to account for certain commodities in a narrow scope at fair value to level the playing field in the financial services space. This came up as a couple of places, one agenda request and again an agenda consultation. Codification improvements related to LIBOR, that's a maintenance item that is required because of a change in regulation. We have equity method, which a couple narrow targeted improvements are being considered and going to be proposed. Those came up in agenda consultation. Indexation of debt and equity, that came up in agenda consultation and through other feedback that we informally receive. And the point of that is to make the guidance easier to use while fulfilling the needs of investors. We've been talking on both sides and think there's a way to do that. One of the benefits to investors is if it's easier to use, it's more likely to be right too. So, I think that's an important aspect as well. Another EITF issue on mortgage servicing rights. And finally, a PCC issue on subjective acceleration clauses that also is being wrapped in with some other issues that are received back on agenda consultation. So lots accomplished. Thanks to the team at doing a great job in supporting the board. And also the board's been doing a great job getting through all this stuff. So, all right, I'll stop there.
All right, great. Thank you so much again for such a thorough update. Any remaining questions or comments? Paul, I see you have your hand up.
Yes, so you mentioned in passing IFRS, but just broadly, do you think the level of convergence between US GAAP and IFRS is appropriate, or should you be focused on greater alignment as a priority?
Yeah, I think that'll get passed over to me, Paul. Thanks. Listen, I think we have a good starting point, right? And I think we have some standards that are generally converged, meaning that we get to similar outcomes and similar fact patterns. But I think there's always areas to to consider whether more progress could be made, and that's by both boards, right? That's by the FASB as well as the IASB. As part of our standard setting process, when we ultimately are considering a solution, we always look to, is there guidance under IFRS standards that's appropriate? Is that something that we should be considering in this marketplace? And that becomes part of our cost benefit analysis. Are we moving more closely or further away? The IASB has a similar, albeit different process that they consider. But we also, to the extent that we've done standard setting in areas that the IASB does not have guidance on point, things like environmental credits, things like digital assets, that's information that we provide to them so that they can consider is there an opportunity for them to move their standards closer to US GAAP in those areas.
Yeah, thank you. That's helpful.
Any other questions based upon that update or comments? Okay.
All right, Laura. And Laura, maybe this would be a good time for me just to make a couple points. Jack worked through a large volume of activity that we have going on here. A lot of items that people have raised to us or that were otherwise identified to consider adding to our agenda. A lot of exposure drafts coming, and with that, ultimately, a lot of final standards. And one thing that we're particularly careful about is making sure as we go through those, particularly when we have multiple projects ongoing at the same point in time, is that we stagger those and we make sure that our stakeholders can participate in all key steps of that due process. Some of the ways we do that is we take a look at what the scope of the project is and who would be interested stakeholders, recognizing not every one of these topics applies to every preparer or every user. Looking at the timing of when we're issuing exposure drafts and the comment periods that we're setting so that people would not be overwhelmed by responding to 15 exposure drafts, for example, at once with the same deadline. We stagger them out and also considering the relevance of different exposure drafts to different parties. And the same thing with final standards. The other thing that we do and we're careful about is when we look at effective dates. Sometimes it makes sense for some standards to have similar effective dates, other times spreading them out a bit more to make sure that there's appropriate resources for successful adoption of standards. So I just wanted to mention that. I know we get excited about the progress we're making, the different things we're doing, but bringing it back to ultimately making sure we get that high quality input from stakeholders and we get that high quality adoption of our standards by our stakeholders, that's key to our whole process. And I just saw Mark's hand go up, Laura.
Yeah, go ahead. Thank you. Thanks, Rich. Go ahead, Mark.
Hey, Rich and Jack, just one overall broad question. How are you seeing AI impacting standard setting, both in the current and then as well as the expected future?
Yeah, so, and maybe there's two ways of looking at that, Mark. There's the internal and then the external, right? So internally, as part of our process, we certainly have different AI tools that we use and that we're experimenting with to help us make standard setting more efficient and more effective. The part I would emphasize on that is we are not turning standard setting over to AI. We are using it as a tool, and we have people with the expertise and the credentials to evaluate any output that we're considering using from those tools as part of our process. But I will tell you that's really focused on efficiency and effectiveness of standard setting. And I think that's not dissimilar to a lot of other organizations looking at it, but we certainly take very seriously all of our due process and quality control mechanisms that we have built in place. Now, when it comes to our stakeholders, certainly we have the data center infrastructure and investments that are ongoing right now. That's something that we've been looking at fairly closely as part of one of our research projects related to emerging issues. And in fact, we have a project that we just voted to move forward to an exposure draft related to power purchase arrangements. That is a key output from that initiative. And when you think about AI, there's an awful lot in the news about power supply arrangements, long-term power supply arrangements. So it's looking at that, and is our current accounting models, are they fit for purpose, or do we need to make some changes? The other part of it is, and we'll be talking later this week as a board with a decision on whether to add something to our agenda, relates to consideration payable to a customer. There are a handful of parties that are very active in this space, and sometimes transactions go both ways, where someone's not only a customer, but also a vendor. And when that happens, there's always the question of how do you value those two parts of a transaction, and are they appropriately reflected individually or not? Or what happens when you put a third party in there? Do you still look at that guidance? So that's something we'll be talking about Wednesday of this week. So I would say there's those two. I said in between, it's really recognizing there's different forms of financing. There's significant investment here. Our staff has been looking at, our existing standards working well? In other words, are they fit for purpose? Our standards related to leasing, our standards related to financing obligations, as well as potentially our standards related to impairment. So we're looking at those. We'll be bringing that back to our board at a future meeting, but that's kind of the holistic process. That probably the more down the road issue will be as entities begin using AI to help them with their accounting, it will certainly raise internal control and audit questions, but there may also be questions related to accounting. And I think it's only fair that we stay on top of those issues and outreach with stakeholders to make sure that, to the extent there's something we need to do in that regard, we would be ready to do so.
Thank you, Rich.
Okay, maybe I can direct you to slide 84. Was there something else, Laura? I'm sorry.
No, I think that, continue, Rich.
Okay. So on slide 84, we give an overview of I'll call it the other projects, and appropriate title, other projects overview. And that includes our research projects, activities of the Private Company Council, the EITF, as well as the in-process post-implementation review. Under research projects, the one that we talk about the most is the invitation to comment related to agenda consultation. I would just note, I'll give you an update on that shortly, but that is still on our research agenda and will be till we complete that project. During the quarter, I did add a general catch-all related to current trends and emerging issues, and that's one of the areas we were looking at were data centers. The other relates to private credit and accounting by investment companies, and another related to the SEC's pending rule change related to potentially changing related to interim reporting and making sure our standards work appropriately should that change go into effect. So 3 items there. You may say, hey, aren't you always looking at current and emerging issues? We are, but we thought it was actually helpful to highlight certain items for our stakeholders that we're looking at to really engage them and to give them an opportunity to not only see that we're looking at them, but to come in with their perspectives. And so I think it's been very helpful that way. It certainly raised the profile of those initiatives, and it gives us an opportunity. On the Emerging Issue Task Force, I'd just like to, once again, thank the EITF. I think they've been terrific at not only identifying issues on a timely basis, but recommending, as they make recommendations to our board to consider adding something to our agenda, proposed solutions. So you'll see they've been active. They had 3 projects on the agenda. The one they transferred to us or recommended to us during the quarter related to mortgage servicing rights. We not only added it to our agenda, but we voted to move forward with an exposure draft. The two remaining items that you see as of June 30th, interestingly enough, one of them has already come to our board. That's related to power purchase arrangements. And our board has voted to move forward, not only to add it to our agenda, move forward with an exposure draft, but also this Wednesday, we'll be talking about an issue related to consideration payable to a customer, which the EITF also identified. And as a board, we'll be making an agenda decision related to that. If you move to the next slide, you'll see this is the recurring slide on the progress of our agenda consultation. Highlighted in yellow is where we stand currently. As you remember, this 2025 agenda consultation, we had talked about how our plan was to wrap that up in 2026. I'd say we're well on our way. Our staff has been working very hard, and our stakeholders have been really helping us with this process. I'd say we're about 80% complete. Our current plan is still to finish this agenda consultation by the end of the year and issue a report summarizing all the feedback we received and the board's decisions related to that feedback. And I'd continue to emphasize we certainly appreciate all our stakeholders who take the time to tell us what they think should be our priorities and why, and how we can improve GAP. This is now our part of the process of we take that input and we make decisions with it, and we owe them that transparency. Not only that we discuss it in a public meeting, but ultimately a report so they can see what their feedback was and how the board considered it in an ultimate decision. So looking forward to wrapping that up. The following 2 pages just give you some updates on projects. If you move to slide 86, it talks about items that have been added to the technical agenda. Some where we've not only added them to the agenda, the items in blue, but where we've voted to move forward with an exposure draft. So they've got not only been added, but we're also in that next due process stage. Other items where we've discussed them as a board and the board has said, hey, I need a little more information about those topics before I make a decision to add them or not. And you'll see those are highlighted in yellowish orange, I'll call it. So, so those will be coming back to our board for final disposition at some point in time. But again, it really means that we got great information in the agenda consultation process, but the board had some additional questions to see, is there really a project there for us to do? Not to let you think we had absolutely everything to our agenda. If you move to the next slide, you'll see there were other items that we talked about as a board. And we decided not to add them to our agenda. And some of these are not add, but some are maybe not add at this time. Meaning maybe there was another project that we thought could ultimately resolve the issue, or maybe at a future date, this would increase in prevalence, or a different solution may become available. But we, for a variety of reasons, decided not to add those. And the details on these items is what you will see in that report that we plan on issuing later this year. The final item I wanted to cover is our post-implementation review activities. We have one project that's currently undergoing post-implementation review, and it relates to our current expected credit loss standard, affectionately known as CECL. During the second quarter, we had a public roundtable where we invited stakeholders to come in and share their perspectives on CECL, on what were the costs associated with the standard, what were the benefits associated with that standard. It was a robust discussion. I will say from its issuance prior to my arrival here at the FASB, CECL got a lot of people's interest and a lot of passion and a lot of different views. And I will say that I think we heard that interest, the passion and different views as part of the roundtable. So that is simply one of the pieces of information that we've been accumulating over the years related to CECL. Our plan is to wrap up the CECL post-implementation review later this year. So I look forward to probably talking with you about that at the next trustee meeting. You know, obviously this has been going on for years. We've done numerous standard setting activities to address different issues related to CECL. But I do look forward to accumulating all that information and sharing that with you at the next meeting. So with that, Laura, that's what I had for today. I don't know if there are any questions.
Thank you, Rich. And that, again, an incredible and thorough update. Any remaining questions or comments? Okay, thank you, Rich and team. That was excellent. Now we're going to move to Sue Cosper, who is our liaison to the PCC for a report out. Sue, welcome.
Thank you and good afternoon. Our last PCC meeting was held on June 1st and 2nd. And for reference, the PCC meeting recap is on page 43 of your materials, and the liaison report begins on page 89. The PCC had a very productive meeting in June, maybe just a few highlights from that meeting. The meeting centered on a mix of PCC research on their agenda priorities and FASB projects where the PCC provided input to the board on FASB decisions and project activities. For example, the PCC discussed the staff's incremental research on accounting for employee stock ownership plans, or ESOPs, leases, and other potential future PCC agenda priorities. For private companies, specific financial reporting issues highlighted in the FASB's recent agenda consultation. The FASB staff also provided an update on a variety of active technical projects, including subjective acceleration clauses, which was a project recommended to the FASB by the PCC, the debt and equity project on indexation, the definition of common control, digital asset-related projects, and targeted improvements to the equity method of accounting. In advance of the public meeting, there were 2 private education sessions for the members of the PCC on ESOPs by an outside expert and by the FASB staff on debt and equity accounting. As an observation, there continues to be a high level of engagement among the PCC and FASB members in the meetings, so that's a real plus. Turning to town halls, liaison meetings, and other activities, there was a liaison meeting held virtually with the Technical Issues Committee of the AICPA in May, which focused on the PCC agenda priorities and their feedback on those activities. In June, the PCC hosted a town hall style forum at the AICPA Engage conference, which is a conference for practitioners who primarily service private companies. The FASB and the PCC hosted an educational webcast in early May. And in your materials is a list of articles about the PCC that Jerry Shaver, PCC chair, authored for certain accounting related publications. The next PCC meeting will be held in Norwalk in September 28th and 29th. And the meeting also includes an annual in-person meeting with the Technical Issues Committee of the AICPA. And with that, I will pause here for any other questions.
Thank you, Sue. Any questions for Sue or reactions from the update? Okay, thank you, Sue. Really appreciate the update. Okay, we're now going to move over to our last report item, which is around meeting observations from trustees in the last quarter. This committee, together with other members of the FAF Board of Trustees, is responsible for observing meetings and public forums of the Standards Board and their advisory councils. While trustees are not expected to be subject matter experts in technical accounting, they are expected to observe these meetings through the lens of 6 core categories. These include 1, standard setting independence, 2, the due process adherence, 3, talent pipeline recommendations, 4, chair effectiveness, 5, membership attendance and engagement, and lastly, staff support and interaction. Between May 9th and August 6, 2026, there were 10 meetings observed by 10 trustees, with each attending a FASB, GASB, GASAC, or PCC meeting. And we're pleased to share that every trustee has engaged in this key objective over the course of the year, and 27 meetings have been observed to date. Committee members had the opportunity to share their feedback on their meeting observations with FASB and GASB chairs present, and no concerns were identified across the 6 core categories. I've seen all of you who have attended the meeting, so again, thank you so much. I'm just going to randomly ask Mark, since you attended a handful of, I believe, PCC, FASB, GASAC, and GASB, to maybe share any color or feedback from your observations from attending the meetings.
Yeah, thank you, Laura. These meetings have been very, very helpful from my perspective in terms of our discharging our oversight responsibilities. each and every time, as Laura said, we don't have to be subject matter experts, but we are there to make sure that we're following due process, that the members are engaged in the meetings, that there's adequate staff support and interaction. And so as I've had the chance to observe across a wide spectrum of these opportunities, been very, very pleased that the process is being followed. The level of engagement is strong. And I've been joined by many of my fellow trustees in observing these meetings. And so we always talk about when you leave one of these meetings, you come out of it smarter and more engaged, not just so much on the technical aspects of the meetings, but again, the process itself, in that it's working, and the things that are open for improvement. There's receptivity there in each and every respect. And so those are my observations over the last 3 months. And I've got many more scheduled here in the coming months through the balance of the calendar year to remain further engaged.
Great. Well, thank you, Mark, and thank you to all the FAF trustees and the Oversight Committee members that have been able to join at least one, if not more, of these meetings. Looking ahead, we currently have 6 more trustees signed up to observe 16 meetings through November 5th, 2026. And the committee looks forward to this continued engagement with the Standards Board and their advisory councils. And we remain committed to its oversight responsibilities in this regard. So with that, we are now at the end of our public session of today's FAF Standard Setting Process Oversight Committee. Many thanks to those of you who tuned in for today's webcast. And please note that the next Oversight Committee public meeting will be held in Norwalk on Monday, November 16th. 2026. Thank you all and have a great day.